Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is May 20th, 2018 edition of Market Outlook. All right, so relatively quiet week, market digesting the big move up last week. Let's take a look specifically at what the indices are telling us at the moment. Well, first of all, again, I want to reiterate that small caps are definitely taking the lead. In fact, they hit new highs this week, and one of the things you can see is right up here, we actually hit new highs, retreated right after, and it looked like there might be a failure, but the market actually rallied back out, took out that sort of two-day pattern where it looked like there might be a failure at this level up here and closed really strong for the week. In terms of our proprietary real motion indicator, you can see momentum on IWM acting really strong. Now, things not looking as rosy, but not too bad overall. In this digestive week, you can see we basically held across the board both the 50-day moving average and the 10-day moving average, with the exception of the Qs that got hit a little bit on Friday. You can see we basically closed under the 10-day moving average. But all in all, with IWM holding firm and the markets holding above their key 50-day moving averages, things are pretty much looking like they're in gear, but trying to digest. So again, what we've got here is sort of a pendant or a descending pattern, a triangle pattern in the Dow, similar in the S&P, as you can see. Now, in terms of our trend strength indicator, again, what's interesting is IWM really leading here. You can see TSI +4, where all the other indices are barely hanging on for positive trend strength indication. Now, we look at this TSI, and that's really a crucial number to watch. If these things start going negative, that would be an important indication that the market is on the defensive, and this could come in way ahead of a nasty sell-off. So we definitely want to keep an eye. Certainly come back to the website and see what the daily updates are and make sure these TSI numbers are remaining positive. Now, moving on to the weekly charts, again, all focus on IWM. Taking a look here, you can see IWM basically attacking the highs of 2017. Not the case in terms of the Dow, right? There's a big divergence. Even more wonky is the S&P, and the Nasdaq sort of in the middle, pretty strong, still positive overall. So again, weekly trends with the IWM leading all of the stock indices up. And so in essence, buying on any weakness, as long as it stays above the 155 level, which is above that 10-week moving average, that's important support. So any retracement can be bought, and the trend would still be intact. Looking at key intermarket interrelationships, looking at the S&P versus utilities, one thing's for certain, right? Utilities on the defensive. In fact, we moved into a confirmed bear phase in utilities, as opposed to a confirmed bull phase in the S&P this week, or over the last 2 weeks, when we crossed that 50-day moving average. Now, looking at our proprietary indicator here, we've got a confirmed uptrend relative in the S&P relative to utilities. So this key risk-on, risk-off intermarket relationship is clearly saying risk-on. The four other key intermarket relationships are telling the same story. In essence, S&P versus bonds has had some of the strongest movement in years. And in fact, The S&P, as of Thursday, actually improved versus bonds like 10 days in a row, which is a recent record. So can't really argue in terms of the stock market, equities relative to interest rates and bonds. You've got a similar positive scenario looking at risky high-yield debt versus the safety of bonds. Still high yield outperforming. In terms of gold versus the S&P, clearly anxiety index, gold underperforming. You can see here we're clearly above all the key monthly and 6-month intermarket relationship ratio here. So that's really powerful as well. And in terms of looking at inflation versus inflationary products like lumber, which is really a very important intermarket relationship versus gold, because that helps define whether things are in an inflationary trend or a sort of nervous environment where gold is outperforming commodities, and specifically wood, which would mean global anxiety. So whatever tensions had been brewing or are continuing to brew, certainly not showing up in the market. Okay, taking a look at volume, the one thing that's clear is the attention that the Russell is getting is not only in price, but look, you've got 4 accumulation days versus 1 distribution over the last 2 weeks. That's very, very powerful. Now, the picture across the other 3 indices, which gives us a little bit of pause here, where definitely this sideways action for the week. You can see the 3 out of the 4 indices over the last 5 days down or fractionally down, with the Russells up, right? So in terms of price action over the last month, you can see IWM leading very, very nicely as well. However, again, what is concerning is that volume on the other 3 indices, not convincing at all. In fact, if anything, there's still remnants of some distribution, and that seems to be persistent in the diamonds, the S&P, and the NASDAQ 100 to varying degrees. So the one standout with both price and volume in a strong position is in the IWM. Again, 4 accumulation days and excellent price performance as well. Up this week, leading the charge over the last month as well. So let's move on to market hotspots. The key thing to note is that commodities, oil, and metal mining stocks leading the market higher. And that definitely looks still powerful and in gear. So oil, USO, you can see 5 days up 1.26%. Metal mining also up. They corrected a little bit on Friday, a little bit of profit taking before the weekend. Nice performance there. The other thing to note, global stock markets under a lot more pressure than the U.S. equity markets. And again, just to focus on the 5-day leaders, oil and gas exploration, oil services, and guess what? Solar stocks were really hot as well. So that's the big picture. Again, overall, equities seem to be in a decent spot, all in bullish phases. However, IWM leading the pack on all-time new highs and seems to shrug off any of the volume patterns or negative volume patterns that seem to be evident in the other 3 indices, and sort of putting it on pause for the week. So wasn't a terrible week, right? Markets were down just a little bit, but nonetheless, the pause was not adhered to by the IWM, the Russell 2000. All right, so that's it for now. See you next week, and good luck with your trading.